Hey there, it's monthly market update time. Most of you are simply looking for a summary about what's going in the desert real estate market, right? Well, while that's helpful, there is a lot more to market insights than a summary about whether prices are going up or down, the market is slow or hot. What you're hearing on TV and the radio is usually pretty negative, right? Like, the sky is falling, watch out, freight train ahead. It's boring and hardly accurate. But unfortunately, that's what's being talked about in the media. What they don't talk about is inventory levels, days on market, seasonal averages, attrition rates, or discounts. All of these data points paint a picture and tell us a story about what's really going on in any particular market. Consumers also want to know how the data affects them, right? You know, what's in it for me? Well, we're doing something different than that. So I'm going to break down the different component data points for you and show you how they affect the consumer. So stay tuned, I'll be right back. Hey there, it's me, Burchard, the Desert Realtor here in the Palm Springs region. I record and post content here about the greater Palm Springs real estate market and the desert lifestyle because I love what I do. But more importantly, I believe real estate should be fun and easy. Check back, because I record content every other week. So you're back for the what's in it for me, and so let's just hop to it. So prices. Valley median prices for single family homes closed at $717,500, which is down 1% from last year. And condos closed at $460,000, which is down 5.2% from last year. These numbers are for the entire valley. You're going to find different averages in each city. And breakdowns of those same stats for each city are on the chart I send out every month, and it's also linked in the video notes. This information is important because it shows price trends. And buyers and sellers get an idea of where prices are for the entire valley or a particular city. The percentage change gives us an idea of where prices are trending. So each desert city is broken down in the full market report and on the market at a glance I produce every month. If you need more detailed information about neighborhoods or subdivisions, give me a call, text, or email. I'm happy to provide it to you and interpret the data if that is needed. Months of supply. Valley months of supply still stands at 4.4 months, which is more than last month, but up 29% from last year. Months of supply, aka attrition rate, is important because it shows how many months of supply we have. So, if no new homes are added to the market for sale, it shows how many months of sales we have left. It is one of the measures showing how quick homes are moving. The higher the demand, the lower these numbers will be, and the lower demand, the higher these numbers will be. These stats are also broken down by city and by price point in the full desert housing report, and you can also find it on my website or my newsletter. Days on market. Well, days in market, days on market, potato, it's the same frickin' thing. This is the average time a property is on the market for the valley. This number can be higher or lower in any city, subdivision, neighborhood, or price point. Currently, our days on market is 59 days, which is the same as last month, but it's up 3.5% from last year. We are seeing it slowly creep back up, but it's still just slightly below our pre-pandemic averages of 65 days. Wow. Even with the higher interest rates, days on market still pretty low. Each city and price point is broken down in the full report. Check it out. There's a lot of information in that report for you data junkies. Just saying. Why is this important? Well, sellers get an idea how long it might take to sell their home, and buyers get an idea of what the average time homes are on the market in a particular city or price point. If a home has been on the market longer than these averages, who knows? A seller may be willing to negotiate. You never know. For example, just because a home may have been on the market for 50 days doesn't mean squat if the average days on market for a particular area is 65 days. Right now, there are sellers negotiating since homes are a bit slower than they were over 2 years ago. Hey, if you know somebody considering buying or selling in the Palm Springs region, give me a call, text, or email. I promise I'll take excellent care of them. Inventory is the current number of properties that are available for sale in the market. Our inventory currently stands at 2,010 units, which is up 29.3% from last year. Let's put that into perspective. At the height of the pandemic, inventory was reduced to less than 600 units. Before the pandemic, our inventory averaged 2,500 to 2,900 properties valley-wide. Inventory really doesn't mean much without understanding all the other stats and how they affect each other. Behind me, you can see how this inventory number has decreased since 2018. This demonstrates the increase in demand for the desert. Notice before 2020, we had 2 seasonal ups and downs. These are normal for our market. Then around May 2020, you can see the result on our inventory due to the COVID rush and unusually high demand. Next up, we have sales volume. This is the actual sales activity that happens monthly for the Greater Palm Springs region. This is broken down into two graphs because of the seasonality that affects our sales activity. We have a 3-month average and a 12-month average. For the 3-month average, we currently have a combined total of 588 homes sold. Before the pandemic, sales averaged about 700 to 800 units per month. Notice again how the graph jumps up and down as it follows our seasonal pattern. During the COVID rush, however, it did shoot up to over 1,000 units per month, and it got as high as 1,300 units in early 2021. Wow. That high demand eroded our inventory to below 600 units. For perspective, that's about 25% of our previous normal inventory level. Now, the 12-month average removes this seasonality and shows the trends of how homes are selling year over year, averaged over a 12-month period. There are no seasonal ups and downs on this graph. Notice how it shot up during COVID from July 2020 to July 2021. Currently, we're at 455 units per month, and that's below our pre-pandemic averages of 800 to 900 units. Before COVID, there was relative stability in this particular graph. Then it skyrocketed during COVID, and now it's slowly returning. Notice the steady decline since July 2021. This was due in part to the lack of inventory and is now coupled with those pesky interest rates. These numbers are important since they show buyers and sellers how many homes are actually selling desert-wide, and they're a good indicator of demand. We're down approximately 25% from our pre-pandemic sales averages. Selling over list price shows how many homes are selling above or below list price. A positive number means they're selling above list, and a negative number means they're being discounted off of list price. This graph demonstrates demand, but more importantly, competition. Currently, 34.8% of homes are selling above list price. This is virtually unchanged from last year and slightly below last month. This shows that we are seeing good competitive buying activity with homes still selling above or close to list price. Before the pandemic, we would see only about 10% of homes selling above list price. So, the big difference, huh? At the height of the COVID rush, more than 65% of homes were selling above list price. So pricing is the most important factor, in my opinion, and a major key to creating strong interest in properties. I believe if a home is priced and staged really well, it sells at list or over, and rather quickly. I believe knowledge is power. So now, understanding this data a bit better, you can make more informed decisions with confidence. Sales are still hovering roughly 30% below pre-pandemic levels. However, it is on a slow rise from the decreases we saw since early last year. The current decreases we are seeing are following our seasonal trends that we see every year, coupled with those interest rates that we spoke about. The market is stable because we have a good balance of buyers and sellers. So, it's a healthy market. Slower than what we're used to, but healthy nonetheless. As inflation continues to cool off, which we are starting to see, we will hopefully see these interest rates starting to creep down, and that will increase demand and activity in our market, and especially across those lower price points. But don't hold out for those 3% interest rates, folks, that we had in 2020. I'll be shocked if I see those in my lifetime. Remember, don't wait to get into real estate. Get into real estate and then wait. You can always refinance when rates drop if you can qualify at the current interest rate. So go for it. There are many different loan programs that will make it easy for you to qualify. Check it out. Hey, please pass this on to a friend or family member who may be looking to buy or sell here. Now, watch this awesome video about beefing up your curb appeal. Bye!